Forex Focus brought to you by IG, taking a look at Chinese stocks. The recent crash through historic lows for stocks and closely approaching 15-year lows for Chinese stocks, and what that could mean for the Australian dollar market. We'll get to all those correlations and that Aussie market in just a second, but I want to give some background on this move here in Chinese stocks, because you might say, Frank, NASDAQ is 5% away from all-time highs. German stocks, Eurozone stocks, are near or at all-time highs. Chinese stocks, how could they be down 25% from their highs on the year? And we're going to add some more context to show just how rough of a price 24 is for FXI, which is a major Chinese stock ETF, trading below $24 just recently here for the first time all year, as Chinese economic data just not picking up. And this is a scenario where everything bounced back after the initial crash of the pandemic, right? In March, everybody remembers March 2020, stock markets across the world crash. But then by the end of the year, most of them able to regain that ground and get either close to or through new highs there. And the Chinese stock market did that as well. But a lot of that activity was under this notion of, okay, of course, this pandemic is awful for a number of reasons, but some of these tech stocks actually can maybe, dare I say, profit from this scenario. More people online, more people at home, and X, Y, and Z. And so stock analysts and speculators started to price in actually growth for these stock markets by the end of 2020 in this new environment. And then you went on to see, U.S. economic data throughout 2021 and 2022 screaming off the page. That's how we got into, high inflation, as we had these huge economic data points that just grew way higher than expected. Same with the Euro area and between the UK and Germany and all these different places. And not so much in China. It just never happened throughout 21 and 22 that Chinese economic data saw a boost, and balance of trade has been a big one, as China's economy is one that profits immensely from exporting goods. And so the difference between exported goods and imported goods, essential data point for the Chinese economy. And recently here, the October value that came out in November, one of the lowest, save for an odd number there in February of 2023, the lowest that they've seen in the last year, when so many places globally, so many economies globally are seeing some of the better data points. And actually this balance of trade number due to come out tonight. So a new one will enter here, and we'll see if Chinese stocks can pick up a little bit, because as I add more data here into the set, you can see that, yeah, we've been lower in FXI, but only for a handful of days. A little over a year ago. And then you have to go back 15 years to, my friends, the 2008 financial crisis is the last time we saw prices like this for Chinese stocks. Wasn't even, I remember the crash there in 2015 going into 2016 of Chinese stocks. And then they saw a huge bounce back to all-time highs by 2020 there. And then you see, again, the pandemic crash there in 2020, bounce back to all-time highs. by the next year. And now we're right back there, not even at those 2015 lows. They moved through that a while ago, but getting close to those 2008 lows of around $20 a share for Chinese stock ETF. And then before that, you have to go to the early aughts to see these prices. As right now, the second closest that we've been to these 15-year lows for Chinese stocks. Why do we care about this as forex traders? Well, hopefully you see what I did right there. Going to the Australian dollar over the same time span, you're seeing a very similar progression of events. As I'll go back and forth a couple more times here, very highly correlated are the Australian economy and Chinese economy, and the Australian currency very highly correlated to the Chinese stock market, as Aussie has been trading lower with the Chinese economic data and Chinese stock market as well. Aussie close to multi-year lows, and you can see if they do get through the recent lows of around 60 cents thereabout, right now trading around 65, 66, right in that territory, they would be at the lowest since 2008. And so you could see the correlation. Is it all causation from China? Of course not. Australia's got its own economy. It deals in so many different markets, a big gold producer, although gold near all-time highs you would think would maybe lift Australian dollar a little bit, but not even that can lift the Aussie here, as it's definitely been weighed upon by these Chinese economic data points. And so here you have even further clarification of the correlation over the last almost 20 years. And you can see it's all positive, doesn't even flash negative correlation for a month or two in this time span. And right now, currently near about as high as it gets at a positive 0.5 correlation. That's pretty strong, especially when you're talking about across asset classes. I mean, if you're looking for a 0.7 or 0.8 or 0.9 correlation, you're talking about literally like Microsoft and Apple, or NVIDIA and AMD, like really close stocks in there, or the euro and the pound, very closely associated markets. We're talking about a forex market and a stock market. One of them's Australia, the other one's China, and so you can see how strong the relationship is here in that historical correlation. Then, of course, when I lay on top of each other the charts, of course, there are periods where one is doing its own thing. There's going to be periods where Australia maybe is seeing high inflation because of something that's going on in Australia's economy, and they're raising interest rates, and that's causing Australian dollar demand, and that's not being seen so much in China and the Chinese stock market, of course. But you see, broadly speaking, these markets over the course of months tending to move in the same direction, which leads me to look at the fact, okay, well, if FXI gets down to $20, this historically low price that we haven't seen since the '08 financial crisis, where about has the Aussie been in that time frame? And you can see when they got down there in 2022 for FXI, there in the black line, you saw an Aussie get down to about 60 cents. And then you go back to 2008, 2009, when FXI was trading under $20 a share for a little bit. And you again see Aussie down at around 60 cents. And so does this mean that that has to happen? No. And also, the elephant in the room we'll get to in a second, Chinese stocks, this could be the low. They don't have to go down and touch those new lows under $20 a share just because they're at 24 right now. But historically, we have seen that $20 price correlated to about 60 cents between Aussie and USD. And of course, you look at the start of the pandemic, and you saw Aussie get down to about 55 cents for just a day or so, not even closing the month there in this chart. But you see what can happen here. But of course, like I say, that elephant in the room, any bounce back in Chinese stocks could bring some bounce in that Aussie as well. As I don't know how sustainable it is that U.S. stocks are up 20% year to date and Chinese stocks are down almost 20% in that same time frame. That's quite a divergence. These markets tend to be historically positively correlated, moving in opposite directions here. At some point, you would think the Chinese economic data will pick up, and that could pick up the Australian dollar. But I don't know if that's from 65 or 66 cents where we are now. Is it from the low year to date around 63 cents or that low in the last couple of years here of around 55 cents? Anything on the table here for Aussie, but I know I'll be looking to Chinese economic data in the stock market in terms of where might be the next step for this Australian dollar. Is it crash or able to rebuild some ground up closer to 70 cents and beyond?